you ever noticed something that just doesn't make sense? When you need money the most, the bank says no. But once you finally have a stable job, a decent income, and you don't even need a loan anymore, suddenly the bank can't stop calling you. Congratulations, you're pre-approved. Need extra cash? Apply for a loan today. No collateral required. It's almost as if the bank is chasing you, desperately trying to put money into your hands. Which raises a very simple question. If money is so valuable, why are banks trying so hard to lend it to you? Imagine you're walking down the street carrying a suitcase filled with $100,000 in cash. Would you hand that suitcase to a complete stranger? Probably not. You'd be worried they'd disappear forever. Yet banks do something that seems even crazier. Every single day, they lend millions, even billions of dollars to people they've never met before. Why? Are bankers just incredibly optimistic? Do they wake up every morning and think, today feels like a great day to risk millions of dollars? Of course not. Banks aren't charities, and they're certainly not in business to make your dreams come true. Every loan they approve is one of the biggest business decisions they can make, repeated thousands of times every single day, because every loan is a bet that you'll pay every dollar back plus interest. But here's the part that surprises almost everyone. Believe it or not, the bank doesn't actually want your car. It doesn't want your house. And it definitely doesn't want to spend years chasing people who stop making their payments. In fact, a customer who defaults on a loan is usually bad news for the bank. Sounds strange, doesn't it? After all, we've all heard stories like, the bank repossessed their house, the bank took their car, the bank made a fortune after someone defaulted. It almost sounds like banks secretly hope people fail. But that's one of the biggest myths about banking. Imagine you own a bakery. Every morning, you bake 100 fresh loaves of bread. Now imagine that instead of paying you, your customers come back later and hand you half-eaten sandwiches. Would you be happy? Of course not. You didn't open a bakery because you wanted old sandwiches. You opened it because you wanted customers to pay for the bread. Banks think exactly the same way. They don't make the most money by repossessing houses. They make the most money when you quietly make your monthly payment, month after month, year after year, for the next 20 or 30 years. That's the customer they love. Believe it or not, the perfect customer isn't someone who pays late. It isn't someone who defaults. And it certainly isn't someone who files for bankruptcy. The perfect customer is actually pretty boring. Someone who always pays on time, never causes problems, never gives the bank a reason to worry, because that customer quietly generates income for the bank every single month. And that's where most people completely misunderstand banking. They think banks are in the business of storing money. They're not. Banks are in the business of putting money to work. That's where the real story begins. Banks are in the business of putting money to work. Think about it this way. Imagine you own 100 taxis. If every taxi stays parked in the garage all day, you don't make much money. Those taxis only become profitable when they're out on the streets, picking up passengers and earning fares. Money works the same way. Cash sitting in a vault doesn't generate much income. Cash that's helping someone buy a house, start a business, or expand a company can earn money every single day. To a bank, money that's sitting still is like a taxi that's never leaving the parking lot. Let's say you deposit $1,000 into your savings account. The bank promises to pay you 2% interest each year. But the bank doesn't lock your money inside a giant vault and admire it all day. Instead, it may use that money as part of the funding for a loan to someone buying a car at 6% interest. You earn your 2%. The borrower pays 6%, and after covering its operating costs and the risk that some borrowers won't repay, the bank keeps the difference. It sounds simple, but repeat that process millions of times with billions of dollars, and you have one of the most profitable business models in the world. But if lending money is so profitable, why doesn't the bank approve every loan application? Why not give money to everyone who asks? Imagine opening a pizza restaurant where every customer promises to pay you next month. It sounds great until half of them disappear without paying. Suddenly, you're giving away pizzas instead of running a business. Banks face exactly the same problem. A loan only makes money if the borrower actually pays it back. That's why banks ask so many questions. They want to know your income, your credit score, your existing debts, your employment history, and sometimes it feels like they even want to know what you had for breakfast. It can be frustrating, but from the bank's perspective, they're simply trying to answer one question: how likely is this person to pay us back? Every loan is an investment, and every investment comes with risk. This is also why people with excellent credit scores usually receive the lowest interest rates. At first, that sounds completely unfair. The people who need money the least often get the cheapest loans. But think about car insurance. Safe drivers usually pay lower insurance premiums because they're less likely to have an accident. Banks think the same way. The lower your risk, the lower the price of borrowing. Now, here's where things become even more interesting. Many people believe banks simply take the money that customers deposit and lend it to someone else. That's only part of the story. In modern banking, when a bank approves a loan, it usually credits the money directly into your account. At the same time, you now have a legal obligation to repay that loan over time. In other words, banks don't just move money around, they create new bank deposits through lending, all within a financial system that's tightly regulated by central banking laws. It sounds almost like magic, except it's actually accounting. Of course, that doesn't mean banks can create unlimited money whenever they want. If that were true, every bank would be richer than every billionaire combined. Banks have to follow strict regulations. They must keep enough capital to absorb losses, manage risk carefully, and prove they can survive even if many borrowers stop making payments. Lending too aggressively can destroy a bank, just as quickly as lending too little can reduce its profits. And here's something that surprises many people. Banks don't celebrate when customers default on their loans. Repossessing a house isn't a victory. Repossessing a car isn't a bonus. It's usually the bank's backup plan when everything else has already gone wrong. Foreclosure takes time. Legal action costs money. Selling a repossessed property often brings in less than its full market value. In many cases, the bank loses both time and money. What the bank really wanted was 30 years of steady monthly payments, not a house it now has to sell. That's why banks spend so much effort finding reliable borrowers. Their dream customer isn't someone who struggles every month. It's someone who quietly makes every payment on time, year after year, without creating any problems. From the bank's point of view, that customer is far more valuable than someone whose loan ends up in court. So, why are banks so eager to lend you money? Because loans are the engine that powers their business. Every successful loan creates income. Every reliable borrower becomes a long-term customer. But that doesn't mean banks want everyone to borrow. They only want people who are likely to repay. That's why they advertise loans everywhere while still rejecting many applications. They're not looking for the most desperate customers. They're looking for the right customers. And that leads to the biggest lesson of today's video. Debt itself isn't good, and it isn't bad. It's simply a financial tool. Used wisely, it can help you buy a home, build a business, or invest in your future. Used carelessly, it can trap you in years of unnecessary payments and financial stress. The difference isn't the loan, it's how you use it. The next time you see an advertisement saying, "Get approved today," remember this: the bank isn't offering you money because it's trying to be generous. It's offering you money because it believes that if you manage that loan responsibly, both you and the bank can benefit. Once you understand that, you'll never look at a loan or a bank the same way again. If you enjoyed this video, please hit the like button, share it with someone who wants to understand how money really works, and subscribe to Money Decoded for more simple, entertaining explanations about finance, investing, and economics. Thanks for watching, and I'll see you in the next video.